Well, if you see in the last 1 year, the share prices of IndiGo have rallied by nearly 32%. And if you compare it with the pre-COVID levels, the current share price is around 15% higher compared to the peak that we had seen in the pre-COVID level. Now, if you see the changes that have happened compared to pre-COVID level to now, there are not many changes that are positive for the company. If you see firstly the daily air traffic, now that is down by nearly down to nearly 2.8 lakh compared to 4.2 lakh that was there earlier. The number of players are the same. In fact, two more players are expected to come in this calendar year, that is 2022. On the fuel price side, the fuel prices are higher at around 90,520 compared to around 63,000 that we had seen on the pre-COVID level. Other than that, if you see the passenger load factors, now that are also lower compared to what we had seen in the pre-COVID level, and the market share. Now that is something positive that has come in for IndiGo. That has increased to around 55% from 48%. Along with this one positive, that is the market share gain, there are few more positives that have backed the rally in the IndiGo, and we have Anisha to tell us more about that.
Oh, well, yes, a lot of tailwinds which is working well for IndiGo. The case in point being with respect to the overall growth that we have seen in the traffic, with the COVID scare fading a tad bit. We have seen in the quarter gone by, Somit, for instance, the air traffic was up 55%, and that tells you that that revenge travel is back. Secondly, that entire boardroom tussle that was going on and was an overhang on the stock for the last 2 years has now got sorted, with Mr. Rahul Bhatia now being proposed to become the MD of the company. Pending the shareholder approval is something that should augur well for the stock as well. And the company has been doing and taking initiatives to improve the efficiencies. We do remember that the company has replaced the old aircrafts to bring in the new ones with better efficiency and fuel efficiency, and they have replaced almost 55 aircrafts with respect to that. And lastly, they have a strong balance sheet. We know that IndiGo is one of the best placed when it comes to the aviation sector in the country, and their free cash flow was up around 23% on a quarter-on-quarter basis last quarter. So I'm sure all these tailwinds should augur well. What are you worried about?
So there are a couple of things that I'm worried of. Firstly is the fuel price hike that we have been seeing. Recently the fuel prices were increased by nearly 5%, and at this moment the fuel prices are at an all-time high of around 90,520 as we mentioned. Now this increase in fuel prices that we are seeing should not have been a problem if the ticket prices would have been higher. But if you see in the last 2 months, actually the fuel prices have increased by nearly 20%, but the ticket prices, if you even consider the 7-day forward rate or the 2-month forward rate, they're up by only 2 to 5%. So this is one concern that I've been seeing. Other than that, if you see the air traffic recovery that we have been seeing is at a much slower rate. If you compare with the pre-COVID level, the current air traffic is only at 70%, and if you see the peak that we had seen during the COVID period, air traffic had reached only 88% of the pre-COVID level. So the recovery that we have been seeing at the for air traffic is very low. Along with that, if you see, and the biggest risk that is there, that is the competition that is expected to come in. Now we are expecting 2 new players to come in. Now Akasa is the new airline that will come in, while Jet Airways will be the second, will make a comeback under a new ownership. Along with this, post the acquisition of Air India by Tata Group, some sort of consolidation among Air India, Vistara and Air Asia is likely, which could trigger a market share war, and IndiGo being the largest player with around 55% market share could stand to lose because of this market share war that we are expecting. Now along with this, if you see, these are the main things, and if you see, thus 2022 will become a major and an important year for IndiGo, because all these things are expected to happen in this calendar year, and the biggest risk that is there is the market share again, and thus it will be important to see whether the premium valuations of IndiGo sustain or not in this calendar year.
Sumit, Anisha, fantastic. Bull and the bear case. There's always a case.